Hi, I'm Tobias Carlisle. This is the Acquirers podcast. My special guest today is Jamie Powell. He's a reporter for the FT Alphaville. He's broken some really interesting stories. We're going to talk about it right after this.
Tobias Carlisle is the founder and principal of Acquirers Funds. For regulatory reasons, he will not discuss any of the Acquirers Funds on this podcast. All opinions expressed by podcast participants are solely their own and do not reflect the opinions of Acquirers Funds or affiliates. For more information, visit acquirersfunds.com.
Can you just start from really basic, explain what your job is, and then explain what is unusual or what is particular about being a reporter at the FT's Alphaville?
Yeah, so I guess the job of a journalist is to, when someone, the way I think about it is FT Alphaville is a blog, and there are different types of journalists. There are journalists who only write opinion pieces, and they'll be the kind of brand name journalists you might have heard of, like a Paul Krugman is an economist who writes kind of analysis opinion pieces, and he sells papers based on his name. And then there are reporters, you might not know the names of them, but they're the people churning out, or maybe not churning out, writing very nice pieces on, I don't know, Chesapeake's results today, or Facebook's results a few weeks ago. And they'll do the 400 words that say, Facebook reported earnings, the earnings per share was X, the profits were X, Mark Zuckerberg said this on the conference call, an analyst said this. And just to give you instead of you having to read that entire thing yourself, if you're not invested in that stock, you just want to get an update on what's going on with Facebook or in digital advertising, then they do that kind of job. And they'll also do interviews with the chief executives, and they'll do maybe like an analysis piece, like a longer piece for the newspaper. And then I kind of sit somewhere in between. So I report on the news, but it might not be, I don't have a defined beat. So it will be what I'm interested in, what I think is news. And also there'll be some sort of opinion and analysis thrown in there. So there'll be a news story, let's say Ocado, which is a big online grocer here in the UK, a very popular stock, reported its results, and we'll have a story about that, and they beat expectations and the share price is up 5%. And I'll do a story being like, well, there's something, let's actually have a look at their working capital, like the cash flow missed expectations. No one really seems to care, but what's actually really going on under the hood of the business. And I'll do a piece, like a kind of analysis piece based on that. Maybe, and often it will be framed as a kind of in a questioning tone. But a lot of the time it'll just be kind of like, hey, this is interesting, like more like a bar conversation than a news piece. And it's written like that as well. It's written in a way of my first boss, who was Dan McCrum, who's the main Wirecard reporter. He gave me this good rule, which is like, if you could tell your friends in a pub about it, it's probably a news story. Like, it's probably worth writing. But if your friends wouldn't care, then don't write it. So, so it should be like easy to understand. And if it's technical, you should be able to explain it quite easily. So I guess like the job really boils down to writing what you think is important and what you think is true and accurate, and not kowtowing to the bombardment you get from PRs and the companies. In the US, there's 5 PRs for every journalist, and I think in the UK it's 3. So our email inboxes, I open my email every day, and it's got, before I wake up, and there's 200 emails from people I don't know, right? With all the earnings press releases, some analyst who I've never heard of with a comment on Beyond Meat's numbers, and you're just kind of like, it's just, so you've got to kind of really sift through that and figure out what's important. And quite often very rarely do you get anything from those, but every now and then you get a nugget. But there's the other rule of journalism. Your job isn't just, if someone tells you it's raining, your job isn't to write it's raining, it's to look out the window and see whether it's raining or not, right? So I think
So the job is to sort of find the thing that is interesting to you and to someone who you could discuss it with in the pub. But how are you sort of like, who is your audience when you're in the pub? Are they other people? Are they investors? Are they analysts? Or are they just, completely retail. You have no expectation of any sort of knowledge.
On Alphaville, we're allowed to, I mean, this is something I kind of generally fight for at the FT, but I think you've got to assume a bit of knowledge from your readers because you treat them like adults. I mean, there was a time in news journalism, in financial news journalism, where you had to explain what EBITDA was every time you typed EBITDA. And in a way, you're never going to learn if it's explained to you. Like, I remember when I first got into finance, reading the first finance book I ever read, and I didn't know what EPS meant. And I got, I was on page 10 of, it was Guy Spears' book. And I was on page 10 of Guy Spears' book, and he was like talking about how, he moved away from Wall Street to Zurich because, he was sick of just being obsessed with quarterly numbers and wanted to focus on the longer term investments. And I was like, what the is EPS? And I had to kind of go on Google and go on, Investopedia and figure it out. I think sometimes it's good to have a little bit of a knowledge, even if someone is back know what you're talking about, like they're most likely on the internet. They can go and look, and it'll take them 3 or 4 minutes, and then they can recontextualize it. So there is a level of assumed knowledge, and I think with some articles, I don't know. Some article, like I assume we know what duration mean. When I say duration, what the reader will mean, and so there is some assumption of knowledge, but it's sometimes good to but for instance, when I'm talking about capitalizing intangible asset development, then I might explain that a little bit more, because you could be a brilliant macro trader and not have a clue what that means, right? So you've got to judge it to that extent. But yeah, it depends on the piece as well, but a lot of the time good to assume a bit of knowledge, but not to the point where they're going to close the article, because in the end you still want them to read it. So
what's the difference between writing a blog? So for a long time that was a very keen distinction between writing a blog and traditional journalism, but probably over the last 10 or 15 years they've sort of converged a little bit, that it might not make much difference now. But what in your mind is the difference between, what do you have some sort of, is it more casual with Alphaville than say a more traditional article in a paper?
I think it's I guess the kind of the blogosphere and the noughties was really where it kicked off. Barry Ritholtz had his blog, and there were Paul Kudrowski, and there's some other famous blogs from that era. And FT Alphaville was launched by the FT as a kind of someone's Hoover in it. It's very quiet, but FT Alphaville was launched with the idea that we would be the first kind of markets blog attached to a paper. So we'd have the editorial standards of the FT, which are very high, and there's a lot of rigor going to fact checking and making sure everything you say is true, and running stuff by lawyers if there's going to be some legal problems potentially, in a format which was that conversational tone, which was fun, which took the mickey a bit, and you could do it. And the idea was that you could do a 200-word article taking the piss out of you, or you could do a 2,000-word article about what is going on MBS in 2007, and that was so you get and no word count limit. You can use photos. So that in 2007 and 6, launch, and the Wall Street Journal and Bloomberg has now was very. And I think the advert taken the need for blogs away. People just do threads. I always think that threads are the new blogs, really, on Twitter. But I still think that people, like, from what I know, readers really enjoy FT Alphaville, and they like coming to us for something a bit different and a bit refreshing, and not just your normal newspeak or a kind of and your normal tone in writing. And we always try and focus on odd and different things that other people might not know what's going on, and also try and be early on trends, which obviously means you might be completely wrong sometimes. But we wrote our first Bitcoin article in 2011, right? So we were writing about, like, will Bitcoin be a payment system before when it was trading at below $1. So And unfortunately, some of us did own some and then got rid of it. So that's been someone actually lost their keys as well. It was a frantic day in the office looking for them, so never found them. So, but yeah, no, we always try to be early on things. Sometimes that means we'll be kind of wrong on how things will turn out, but like directionally right in terms of it becoming a larger thing. And sometimes we'll just be completely off. But it's always worth thinking about what might happen in the future. So, and once it becomes a main FT story or a main news story, then we'll try and find something else because everyone's writing about it. So. Yeah.
What's a typical story? What's the sort of the story that you're looking for that makes a great FT Alphaville story?
Well, because about whatever we want, I've tried to build up like a speciality in certain topics, and then that gives you the knowledge to write articles quite quickly rather than having to like learn something on the fly, which I think if you're new to a beat, it's quite terrifying because let's say you're the leisure correspondent at the FT and you've got to learn about how cruise liners work. And that's like a lot of work. Like they're all domiciled some of them are domiciled in African countries, and like, what are their main expenses? Like, who are the key players? Like, who are their suppliers? Who are their customers? And like, that's a lot of knowledge. So over my time at Alpha, I just try to build up knowledge about 2 or 3 things. So one of the main things I do is the kind of accounting stories. So kind of odd things in accounting and exploring whether a company is, let's say massaging their numbers or presenting pro forma accounts, and how and if that's a fair depiction of reality. And quite often with pro forma numbers, it is fair, right? Like it's sometimes fine to take a line item out of accounts and normalize them and say, this is what the real business looks like. We're getting rid of this company. That's why the numbers are a bit skewy. Like, and a lot of the time, but then, that 5% of the time there'll be something very odd going on, or something might quite not make sense, or there'll be something like I'm not going to name the company, but one thing I came across, I was looking at this company in the UK. It's a kind of tech hybrid business, and it said its UK sales grew 30% last year, but then in its new ESG disclosures, its UK energy use went down 5%. So you were kind of like, okay, well, how does that makes absolutely no sense. So unless they've just got an incredible new energy supplier, and I really need to get the name of that energy supplier so I'm paying my bill for like far lower bills and using far less energy. So those are the kind of stories I look out for. And then I like thematic stories on valuation, and I've written a lot about the EVs and SPACs and what's been going on in the market since kind of, I guess, like middle of last year, all the way from Hertz through to GameStop and etc. And so my kind of focus is equities, accounting, and valuation, and so anything interesting that happens on the day about that, I'll write a story about that kind of grabs my attention. And often they can get a bit repetitive. Those stories can get a bit repetitive, especially when the market is like it is now. Like there's only so many times I can write an article say, wow, this company's trading at 50 times EV sales and it's shrinking. Like that. Like I can only write that story so many times. So sometimes it's been a few times this year when I've just sat there like looking at my, I've got a huge Yahoo Finance set up with all the companies I follow, and just looking at it being like, this is so mad that I can't just say everything is mad because that's just ridiculous. But yeah, so those are kind of things I focus on. But then we've got people on the team who are very good on macro. Some people are very good on financial plumbing and Bitcoin. And like, if someone talked to me about how, the whole like settlement, how settlement works in broking, like it's just so complex, and like I probably understand 10% of it, but we have someone on the team who is like a genius on it, right? So, and that's that's kind of things they focus on. So you try and build up a kind of core understanding of a few topics, and then hopefully that gives you a great story. And an example this week was that there was a Messi, the Barcelona player, has left Barcelona and he's gone to Paris Saint-Germain. And there was a big FT story about Barcelona and a lot of financial problems. They spent way too much money on a bunch of players. And they did a transaction, allegedly, which they did a player swap with Juventus, who are an Italian club. But instead of doing a swap where it'd be player for player plus 15 million euros, they did the outright transfer costs. So it was like they said, we pay you 70 million or 75, you pay us 60. And there wasn't a kind of player swap agreement. So it was just, but they happened on the same day. But what that did for their accounts was that when they sell a player, they can book it directly as revenue. So it's the gap between the book value of the player. The player is basically an intangible asset and it gets amortized over his contract. So I just did a kind of explainer about how football transfer accounting works and how, like, there was nothing illegal about the transfers. There was obviously a little bit of gamesmanship with the numbers, but like that is kind of interesting in itself. So I did like a big beta about how football transfer, which was great. So I spent a day like reading about that and then wrote an article. So yeah, I think that's kind of like an example of something which I find interesting. And I think instinctively that doesn't make much sense, but when you lay it out, you kind of think, oh, well, there probably is a reason it's treated like that in the accounts. And, you know, these players have economic value that lasts over the contract period. So it's kind of like buying it, you know, like it's like developing software or something, right? So, you know, and you can fight about which costs you capitalize and which you don't, but
so yeah, they can book the profit from the sale of the player immediately, and then they amortize the cost of the salary of the one that they receive. They're paying him over a certain
and that goes through the cash flow from investing. Yeah, like an investment does. Well,
what's the life cycle of a story? Is it literally you wake up in the morning with your 200 emails from the Flax and you go through those 200 and try to, or you have your own idea, and then is it done like that evening? Are you done? Like how does that all work?
It depends. Sometimes, so I can give you a few examples. So like sometimes there was a story I wrote about a Paris listed Luxembourg domiciled company called Solution 30, who Muddy Waters had been short the company since May 2019. And I wrote some stories about them, you know, and unlike for the normal Muddy Waters short, it didn't come with this gigantic 30-page thesis, you know, with all this detail. They just, because in Europe, you have to disclose your short positions over 5% of the flow. So they over 0.5% of the flow. So they went to 0.5%. It went on the AMF's website, the French regulator, and the shares fell like 20% in a day, but there was no reason why. So I started writing some stories about it I kind of did some work and started looking at it, and I thought it's just very weird business. So I started looking at it back in September 2019, and I did a few stories on it. Nothing really happened. The shares kept going up. And then a whole bunch of stuff happened earlier in December, and throughout that whole period, I'd still be kind of chipping away at it. I kind of set away a Friday afternoon, probably, when I had a free Friday afternoon, which was once every other week. I just spent 2 to 3 hours like going on Romanian company's house and going on and just trying to figure out what the hell what this business was up to. And I finally got a story out in May, but I'd been kind of working on it for like a year. So that was but you know, sometimes you find some weird stuff and you're like, okay, well, that's weird, or they're working with this person who's got a dodgy history, but it's not really it would be a great short thesis, but it's not necessarily like a great FT story, right? So I had to get enough stuff together, and you know, I had to build some sources. I had to try and talk to people who used to work at the company, and all that, you know, that process could take a very long time, and especially when you're going to publish something about a company that is potentially very negative, that can move the share price quite substantially. So, you know, even the legal process on that story took, you know, a month. So that's like a 2,000 word story. But then there's some stories I wake up, and today I saw that App Harvard, one of the SPACs from February, one of Jeffrey Ubben's SPACs, they guided down on their 2021 estimates like mega, you know, and as we know with the SPACs, the whole thing is they just have these ridiculous estimates that they're never going to hit. So I just did a quick story being like, oh, wouldn't you believe it? Another SPAC has missed its 2021 estimates. Like, what about those 2025 ones? Like, so that took an hour to write. So, you know, you get this huge variance, and then some stories last a lot longer than you ever expect they will, and some stories people forget about. And I say, like, obviously only 1% of the stories people are reading a year later, and that's when you know you've done a good one, really, I think. Or people are going but yeah, so it depends. It's a very odd job. It's very hot off and on. So Yeah, and also normally the time you're working by yourself. So it's yeah. Yeah.
What about when you come across something like a Wirecard? It doesn't have to be Wirecard particularly, but it's something like Wirecard where you really do think that you've got potentially something very, very big. How does that process work out where there's a group of people over an extended period of time?
Well, I think with Wirecard, you get, like all good journalists talk to investors, right? I talk to people like you, I get people on the long side, value guys.
Why don't we just back up a bit next for people who aren't familiar with what Wirecard is? Let's okay. Want to start there? Just explain that story.
Sure. So Wirecard was a German payments company that was to a 25 billion euro market cap. It was a darling of Europe's tech scene. It was a vanilla payments company, and there was always a reputation around it for being a bit dodgy, like a very high margin. So Adyen, which is a Dutch payments company, it's a very popular stock actually, was one of its competitors, but Wirecard had much higher margins and was growing at like kind of 30% a year. And the story always was, well, they're doing payments for kind of adult companies and gambling websites, and that's why they can charge much higher margins, because they go near businesses that no one else will touch, which obviously already gets questions firing in your head about why would you work with those businesses. But anyway, they've been, since 2015, they've been the subject of quite a lot of speculation the short sellers have been after it since 2015, and a lot of stuff didn't really add up about what the company, what it was saying to investors about its technology and and its money flows and how good it was at winning new customers. Versus, they had a payment, let's say as one example, remember they had a payments app, which was just a very vanilla payments app. And you open it up on the App Store and it only had like 10 reviews and they were like 2-star. And then you go on one of their competitors in the UK and it would have 20,000 reviews, right? And you just be like, okay, well, clearly something is wrong here. But there was a lot of incidents of like that, and there wasn't really there wasn't a huge smoking gun. It was very incongruous, the entire thing. But it was growing at 30% and it had 30% EBITDA margins. And for a lot of fund managers in Europe, where we've had GDP growth of basically zero, that was a pretty enticing prospect. So it got a lot of people. A lot of investors were in this thing, and it had a very charismatic CEO, and we all know that kind of story. But anyway, so in 2019, the FT, after writing about it a bit in 2015 and then leaving it, we began to kind of look at it again. We had some whistleblowers come to us. Basically, the company had got so big that it began to have to hire serious people, and when you hire serious people at a company that's misbehaving, they actually tend to whistleblow. And I think that's kind of one of the issues with fraud. Why a lot of frauds stay very small is because when you get to that 3 billion, you can start hiring people who will blow the whistle. Like if you keep it under $1 billion market cap, like no one's going to look and no one's going to really care. So
hot tip for the fraudsters right there, keep it under.
No, I think but also the problem is you promise growth, so you have to like maintain a low market cap while still growing. But yeah, so so we got some whistleblowers and it all kind of snowballed. They accused the FT of market. I think they accused us of all sorts. They were a very dastardly business. They were following our journalists. They were hiring ex-Mossad types to try and take photographs of short sellers. They were going to quite extreme lengths for a business to shut down stories, and putting a lot of pressure on our journalists. And then the German financial watchdog opened up a criminal investigation into the FT as to whether we were so we were under like serious legal pressure over, and this was a darling of the German stock market. So we did a big story, I think it was on January 29th or 30th, 2019, after getting some whistleblower stuff the year before. And so it kind of took 3 months to get this story out from what I recall. And the share price fell 40%, and it all kind of kicked off. And for the whole year after, we were under this amazing amount of scrutiny, and it was kind of ridiculous because, I mean, like, you know, if you're going to manipulate markets, then like you might as well be something in it for you, right? So it was quite, it wasn't really, it was a bit of a weird one. But anyway, so by 2020, the company was still saying all was fine, but it got to the point where the board of Wirecard, the supervisory board said, okay, we're going to do an independent investigation. And PwC did an independent investigation, which left a huge amount of questions over the business. And then Ernst & Young, who had signed off on its accounts the year before, in, I think it was June of 2020, basically, after delaying the accounts were getting delayed and delayed and delayed. And they were like, oh, you know, and there was a deadline of June 30th. And I think during mid-June, a press release came out saying, you know, they said they had $2 billion in cash in these two banks in the Philippines. That cash doesn't exist. And it basically turned out that half the business, a profitable side of the business, just did not exist. And it had not existed for 10 years. And actually, there was a payments company there, but as we can guess, a payments company is low margin and was actually losing money, and it was growing. It wasn't growing. So they basically just made up half the business. The COO, he escaped to, we think, Belarus, never to be seen again. He had some interesting ties with some international characters. The CEO is currently in jail, awaiting trial, I believe, and the stock is at zero. So we were very much vilified by our reporting, but there were definitely times internally, and you know, even talking with friends about it, where you're like, oh, you know, is this worth the risk for us to keep poking it? Like, are we wrong? Right? Like, we could be wrong. Like, it's completely, you know, and that happens. Like, you get bad sources, or you get the wrong, you know, and Lord knows I've been wrong about some companies. So so yeah, I think it was a good moment at the FT that day. I mean, never want to see a company go to zero, people lose their jobs, etc. But the amount of pressure we've been under, it was kind of a nice release. So yeah, bonkers story. Yeah, and I mean, yeah, we could go on about it, but yeah.
Well,
so.
Perhaps the most baffling part of the whole thing was the regulator opening a criminal investigation into the FT. That's how did that? How were they persuaded to do that? Did the company have some sort of in with them?
I'm not super au fait with the story. I'm just going to quickly look. It was I think, yeah, it was yeah. So German regulator files complaint on alleged Wirecard's WIC manipulation. The German watchdog, filed a criminal complaint against 2 of our journalists and several short sellers, accusing them of potential market manipulation over the suspected accounting irregularities. I mean, that must be the most legal first paragraph the FT's ever written. So that was on April 16, 2019. Yes. So I don't know. You know, it's hard to say. I think in US capital markets, you guys are very lucky to have a very healthy, skeptical capital markets. It might not seem like that all the time, and particularly this year, it's felt like it's kind of out of control at times. But at least you have a very healthy short selling community. You have the First Amendment, which means you can't get sued for libel, which is a big problem in Europe. And the UK has some of the most aggressive libel law in the world. Like, if you're a Russian oligarch and you can't sue in the UK, you will sue in the UK because you've got a very good chance of winning. I think with this one, we were just someone was talking in someone's ear. Big companies, as we know, have political power, and somehow this came to fruition. And I think it's important to note with European small countries, capital markets as well, is that like the billionaire and upper millionaire class, they all know each other. This isn't like, I always say to, you know, when we're talking about America, like there's probably an insurance company in Kansas City that would be like the 5th biggest insurance company in the UK if it was here, right? But I've never heard of it. It's family owned. it ticks along, it's doing great, but like America just is so big and so rich on a per capita basis, such a much bigger economy than all these other European economies, that you don't get this kind of web of people, of just everyone knowing each other. Everyone's the same dinner parties. They all live in the same two. In London, in the UK, they all live in the same city, but in Germany, they might all live in Munich or Berlin or Frankfurt, and in France, they all live in Paris and holiday in the south of France. So that leads to a lot of kind of people looking the other way with these situations, I think, more so. And you combine that with just not having as deep a capital markets, not having as many short sellers, and having much smaller broker coverage of companies as well. And I think with this one, I think it was just I think we'll find out more. Dan's book is coming out at some point towards the end of the year, and it's going to, from what I've heard, it's going to be pretty exceptional. But I think it was all politics basically. And this was the only, Germany has SAP, which is kind of Oracle of Europe, right? But apart from that, like there's no tech heroes in that country. So I think there was an element of trying to defend their one company that was doing, 30% revenue CAGR, as opposed to like Deutsche Bank or whatever. So, and there's also in Europe, there is a distrust of Anglo-American capitalism as well. Going back to definitely after the financial crisis, German banks bought a lot of that paper that ended up being dog shit. So I think there's just a general distrust of, they think everyone's just coming in with axes to take apart their capital markets. And to be fair, sometimes they're right, but I think a lot of the time they're wrong. And so it was a combination of things. But politics and then a suspicion of Western capitalism, I think, or like the way free market Anglo-American capitalism. I think it just combined there to go to a ridiculous extreme. So
it's a reasonable argument. Sometimes short sellers aren't necessarily always right. They're often looking for something that is spectacular, that is going to get attention, or that there's something that you can sort of insinuate something about, and then somebody with sort of a surface level understanding or looking at it immediately will say, yeah, that does look wrong. But if you get to know that, I can think of examples in the States where well-known hedge fund guys get short and let everybody know about it. And it's one of those businesses that has a lot of headline risk, and they're going to have these spectacular events every now and again. But if you can get in there and sort of say that, I don't want to name any of the names, but I can think of a very specific example.
I'm sure we're talking of the same companies, but yeah, and there are always things wrong and right about every company, right? And the question is whether like they're systemic and that they verge on criminal or fraudulent, or whether it's just like, their numbers are going to be weak for a few years, but the actual business is doing fine. Like, and the activist short thing is we could talk about that maybe, but it's very interesting part of the market. So, and there's some guys who do great work, and there's some guys who do, to be honest, shocking work. So, yeah, it goes both ways.
What's your background, Jamie? Were you trained as a journalist? Is that how you come to be in this position?
No. I had a very, very, very odd career. So I was, I started out, I was an arts grad. So my what we call an undergraduate here in the UK, your first degree, I did a filmmaking degree. So it was a practical filmmaking, sort of making films, learning about cinema, studying cinema. And then when I was doing that, I got really into Russian cinema, which is right on the kind of tail end of the the stuff which you kind of stroke your chin and drink whiskey to and smoke clove cigarettes, and you use it to chat to girls, basically.
That sounds right.
So, so I got into that, and I went to study Russian studies at UCL, which is a university here in London. And when I was doing that, I got asked to be in a band by a friend. So I played bass in a band for 4 years. Or 3 years, and it was quite weird because it was one of those things where I was doing my masters, and postgrads, you're not in the UK, the level of work is not the same as your undergrad. Like, you do have time, so I thought, okay, I'll just give it a go. Like, I played bass at school, and by the end of my postgrad, it just turned into this. I was like playing shows like 4 times a week. We were meeting labels, we were on the radio, we were doing all of this I was like, okay, well, I've got to give it a go, because if it works out, it'll just be awesome. But of course, the music industry is kind of like a video game. You need to get through each level, and there's insta-death. It's like an insta-death video game. And once you don't get through one level, which for us was not getting signed, but for some bands is not having a successful second album or whatever, you just die, because you're old news, you have no momentum, and you just need to either start again, new project, or like leave it. So I left, and I was 24 and I never had a proper job. So I thought I better get on with this. And my dad, was breathing down my neck. So I took a job at a startup in London, kind of ed tech, I'd say, like education software. That went really well, and it was good introduction for me for learning about business, because at a company we had 60 employees, but a lot of those were kind of back end and content, so the kind of front of office sales and marketing was like 10. And in those kind of jobs, you're doing everything, right? You're nominally doing this, but if someone needs help putting a PowerPoint deck together for the next morning, you're up till 2 a.m. doing that. And so it was a good kind of intro for me for the world of business. And while I was doing that, I got very interested. We were raising some money, and we met some VCs, and I thought, oh, this is really interesting. These people go around talking to people and making judgments and putting their money in, and that's just, I never really thought about capital, the investing world in that way. I actually had no interest in it, basically. So I went on holiday with a friend who worked at a really famous emerging markets hedge fund here in London called Nevsky. Guy called Martin Taylor ran it, and he's in Hedge Fund Market Wizards. I think he's one of the interviewees in there. My friend was telling me about his job, and I was like, oh, what's it like working there? He'd done the opposite of me. He had a very traditional white collar, grad scheme at a famous investment house, and done 4 years, then gone to a hedge fund. And he was like, oh, well, I just look at companies, I analyze them, and I make judgments, and it's very varied. I get to travel, and I was like, oh, that sounds actually like quite an interesting job. So he was like, oh, I'll give you 5 books to read. So he gave me 5 books to read, which were kind of Guy Spears' book, Howard Marks's book, David Einhorn's book, I think the Snowball, the Warren Buffett biography. I'm sure you've read all of them, and it just kind of, and I read these, and I was like, oh, this is fascinating. I had that kind of eureka moment, I think, when anyone discovers the world of investing and finance. So I just spent 3 years teaching myself. I did we have in the UK, we have a kind of a CFA run junior CFA. So it's not CFA 1, but it's called the IMC, Investment Management Certificate. And it's basically the CFA 1, but you have to do 100 hours versus 300 hours revision, basically. So I did that in my free time, and I was kind of looking for junior analyst jobs, but I was struggling to get hired because my CV was just too odd. I was getting through a few levels, and then I get to the kind of 4th stage, and they'd be like, oh, it's you versus a guy who's got did maths at Cambridge, it's kind of, and I was like, fair enough, I would hire them over me. So so I applied for the job at FT Alphaville, and I was very lucky that Izzy looked at my CV and thought, well, this guy actually, he seems to know what he's talking about, but he's also got a very odd and interesting CV. So I got hired, and I've been there for 3.5 years. So this is my first ever journalism job. So compared to a lot of people, and I came from the finance side rather than the journalism side, and I think that's kind of helped me a lot, because I had like these, I wouldn't say my core knowledge is like, my technical knowledge is incredible. Like, I don't know anything about like quant stuff. I know you had Ben on your podcast. Like, I don't understand any of that, like Corey, that world. But my core knowledge is quite good. So I think like I've just tried to build a niche for myself for writing about that stuff, rather than being there are some journalists at the FT who are brilliant at getting scoops and calling people up, and like they've got an amazing contact book, and like they know everyone. And I'm the kind of guy who like pulls up the quarter and like sees what's weird, and that's my story. So I think that's always been the angle I've come from, rather than talking to people. But of course, also talk to people, but just not to the quiet, and not like pounding the phone. So yeah, that was my that was my 20s, and so now I'm in my 30s. So yeah, that's I've been in journalism 3.5 years. So yeah.
So in that period of time, what are the sort of biggest stories that you've identified? Have you been able to pull anything out of just looking at the reporting?
So I think Solutions 30, which is the company I mentioned earlier, if you want a fun one to read about, I still remember when, muddy waters are short, so it's going to be worth looking at it. And also everyone was trying to figure out why. And I talked to a lot of good short sellers in San Francisco, the San Francisco short seller crew, and they couldn't figure it out. So, they were like, it looks weird, but I can't really see. So I remember one first story was just a kind of overview of the business. It's a man in a van outsourcer. So it goes around installing broadband connections, electric car charging stations, gas smart meters, really last mile, low margin, low growth business. But it had better margins than all the people it was supplying. And it was growing at 60% a year. And it was a roll-up. So it was going around basically buying lots of mum and pop stores in Europe, plugging them into their big contracts. And so it was like, it was a bit of a weird one just on like stepping back. But I started a kind of overview of the business, and I was looking through their 2017 accounts, and they had like Excel tables, in the kind of footnotes for the accounts where you have your receivables balance. Like they had the Excel errors still in the numbers, so they hadn't even like, and this was in their English accounts, and their French accounts were slightly better, but then you go back to their 2013 French accounts, and it was like a scan of a document through a printer, but it looked like it'd been scanned like 5 times, so you couldn't really read like half the text, and this was a company with a 1.2 billion euro market cap. Like, so I was like, okay, this is just, so I did a story being like, look at this weird company it's got. And it had like 100 subsidiaries, had a subsidiary in one of the French Caribbean islands, in North Africa and in Eastern Europe. And, it's just a man in a van company who operate in 5 countries. Like, it should not be this complicated either. So I did a kind of overview, and then I spotted, after I wrote about the company started removing all their annual reports from their website and replacing them with better versions. Like, as I was, because obviously when you're writing a negative story about a company, and I do think this is something some people don't understand, there's a lot of toing and froing between you and the company, being like, hi, I'm writing a story about you guys. Here are my questions. Here's the kind of cut and jib of the story, like what it's going to be about. Do you have any comment? Here, do you want to answer my questions? And, sometimes they just don't reply and then get very angry when the story is published. Sometimes they reply at length and try and confuse you and keep you like asking more questions. So I had a bit of back and forth with the company, but as I was having the back and forth, they started pulling these annual reports off their website. And luckily, I kind of suspected they might do that, so I had them all saved. So I went back and looked, and I noticed in their 2017 annual report that they were audited by Grant Thornton at the time. And at the beginning of the annual report, they had the audit letter like on the first. I know most companies don't have it right at the back of the annual report, but they had it kind of right at the front. And I noticed that it looked like the English version of the audit letter had been translated by them and like made in a Word document. Like, it didn't have the same logo as the Grant Thornton, had a different logo. The text was kind of skewy. It was like cut off at some, like it basically looked like they like papier, like cut bits out like printed it out, cut it out, put it on a piece of paper, then scanned it again to make it look like it was a scan. And they also copy and pasted the signature of the Grant Thornton auditor over to the English letter. Right. So I was like, and of course, like, if you want to get an English version of your audit letter, surely just say to your auditor, hey, can you just do a translate? Well, we've done a translation. Here it is. Can you just like send it over? And they'll say, I doubt they'll charge you a fee, but they might go, yeah, that's 100 euros, or, or whatever it is. Like, so the fact they went to this length was just very odd, right? So I think that's when I kind of knew that this business, and I don't think I mentioned earlier, but what happened was that in last December, an anonymous short report came out about the company, accusing them of laundering money for the mafia. And then Ernst & Young refused to sign off on their accounts in May, citing, I can't remember the exact language, but citing related party transactions with members of management that they couldn't verify the substance of. And the share price went down like 80% on the next morning. So yeah, I think that was a good one. And I've also been following Tesla for a long time, but not so much on the kind of news side of it, although the news side of it is super fun, but more on like the accounts, like what they do in their accounts, you know, like how come this business, like last quarter, like how did Tesla's margins go up 300 basis points while shipping costs and like raw material costs were going up exponentially, right?
How did that happen?
I don't know, but it's worth asking the question. And the good thing is, like, an Alphaville story might just be like, what is this? Like, how did this happen? Like, that is just odds. Like, you ask anyone, any auto analyst, like, auto margins shouldn't move that much quarter on quarter. And for Tesla, they move a lot. Yeah, you can ask the question as well, which is one of the good things about writing a blog versus, and that's not a news story. A news story, that's not, you know, Tesla's margin in the news story. It is Tesla reported better gross margins than expected, which helped them beat their earnings per share target. You know, that's their, but you know, the Alphaville story be like, well, how did that happen? So yeah, so I've been writing. I mean, Tesla's been. I mean, I still kind of, you know, I'm still skeptical of the business, but obviously it's been completely ruinous for those who have had money on that direction. But it's a weird one that, you know, I always think it's that story is still ongoing and it's not finished, but yeah, it's kind of endlessly fascinating. And you know, we know now in 2017 that the company was 2 weeks away from going bankrupt. So like, no one was actually really wrong about that. It's just that there was no 8K about that at the time, and Elon was going around having dinner saying that. But you know, so like, no, like it's a fascinating one, and obviously you get a lot of fan mail about that company, which is always quite fun as well. So
it's a very polarizing company. I've had with people who are just friends and family who have put a lot of money into it, and they you know, I understand their perspective on it, that saving the world, it's an EV, all of this sort of, and Elon's a visionary and all of those sort of things, and I just have difficulty reconciling the account. So that's where, from quarter to quarter, that's sort of my stumbling block. But I have gone back to collapses from the 80s and looked at journalists interviewing the people who were perpetrating the fraud at the time and listened to some of the questions that they have asked. And it's interesting that they might ask 10 questions and 6 or 7 might be just, you know, what's your relationship to Pinochet in Chile? Like, yeah, he's a bad guy and that's a bad thing happening, but that's not what's going to ultimately destroy this company. It's the payments between the related party transactions and the debt that's going to sink this company, and the fact that it's a fraud that's being perpetrated. When you're sort of on these stories where they're powerful people who are bad dudes, and they're interested in protecting their fraud, they want that to continue going on. They don't want to get caught. Do you ever get worried that there are potentially repercussions like Wirecard?
Yeah, I mean, Wirecard, you know, Dan, you know, the guy like floats about like nothing's going on. You know, I would have been a nervous wreck. Like, you know, some people just have the constitution for that. And, you know, you see Jim Chanos and Carson talk about that, saying, you know, like you need a certain constitution in this business. But I think as a journalist, it's even worse because you're going to be the main conduit where this stuff comes out through, right? So in a way, like the most pressure on you. But at the same time, yeah, Wirecard was very exceptional. But I would say, you know, with Solutions 30, you know, the mafia stuff, it's not proved. The company's denied it, of course, and I should be very clear about that. But those are very serious allegations. And as a journalist covering it, you do think a little. I mean, I live by myself. You know, there is a little bit of you which always goes, "Well, should I still be covering this? Like, is the payoff, like, is my salary versus the, you know, is that the risk reward there? You just can get a bit skewed at times, I think, you know. Even if I was getting paid mega money, the risk reward would still be a bit skewed. So yeah, like
in some sense, you're the record, right? So you set the record, whereas Chanos is a player in the game, and he's allowed to be wrong about certain things, but the record has to be set correctly. So there's an expectation that, and they're obviously interested in having that record. The bad guy's interested in having the record written the way that they want the record written.
Yeah, exactly. Yeah. And I do think the smoke screen, I think people do underestimate the gaslighting in journalists have to face from companies at times. Like, it is like, when I took the job, I'd never been a journalist, and I still remember like my first story, which would have pissed off a company. I actually read about this. You've probably heard of this, the Zion Oil and Gas. It's like
Zion,
Zion Oil, yeah. So I read about that. That's the first company I did a lot of writing on. So in like 2018, I did their new well, and it was just the most ridiculous. It's still going, which blows my mind. But anyway, they got a new well. I don't want to go into that. It makes me sad think about it. But anyway, so but I wrote about this. I did, my first story was this kind of long primer about the business, all their failed wells. John Brown had this vision of oil in Israel, and the kind of story. It was a mad story. But
it's literally you say vision, but it's literally like a biblical vision.
A biblical vision, like a religious vision,
conviction.
And he wasn't taking anything either. So, well, who knows? But I remember writing the story, and Dan being like, "Okay, well, you're going to email the company," and like I was like, "I'm going to email the company." I was like, "Shit, that's quite scary," So. Like, that took a lot of getting used to, like, and now it's fine. But I do think it is quite nerve-wracking at times, that element of, and like, you can, when it comes to accounts, something might look dodgy, but then actually there's quite a good explanation for it, and the CFO will tell you, and they'll be like, actually, you know what, and you're like, okay, actually, I don't have a story. Like, I've got 20 stories in my archive which I've never published, because the CFO actually talked to me and said, "I think you got the wrong end of the stick here, Jamie." And I went back and I went, "Actually, you know what? I think he's right." Like, so you've always got to be prepared for that. It's just that's part of the oddness of the job at times, is kind of having these fights with multinational corporations. And like, you're just a little journalist sitting in London, So
I mean, I've got some empathy for you, because I've been on both sides. I've been on that side where you're preparing the accounts and you're trying to put it together, and it's not, equally, it's complex putting them together, and you even if in good faith efforts to put them together, it's entirely possible to make some sort of error or mistake in that, and then to have someone pick up on that and then come back. And they're difficult to understand. There are a lot of moving parts in the accounts. It's not quite as mathematical as people might think it is externally. There are some judgment calls and some grey areas that reasonable, honest people can disagree on. So it's a difficult process, I'm sure.
I mean, lucky my dad was an auditor, so I do get to talk. Luckily, I do have that in my family, so I can call him up and say, like, "What do you think about this?" And he'll go, "I'm not, that looks all right to me," like, instinctively. But so I'm kind of lucky to have that to fall back on. And he always says to me as well, like, "You won't believe some of the discussions I've had in boardrooms, like, about accounts. Like, it'll blow your mind," when he was doing them back in the day. So
just as a final question, what's the ultimate goal? Do you as a journalist, you seek to become an opinion type, like a name that sells newspapers? Do you want to become a Paul Krugman, or how? Where
I don't know. Like, I guess, like, I mean, the traditional way would be, you kind of you work as a reporter, you get a reputation for yourself. You might get a more senior reporting role where you have to write slightly less, but you do more in-depth stories. And my friend and my colleague Rob Smith here at the FT, he now is in this position where he's doing kind of very deep stories on 2 or 3 things, and he's kind of earned his stripes reporting on the bond market and capital raising, and now he's doing that. And then maybe you become a manager and you're still doing a bit of writing, but you're managing a team of reporters and you move up the tree. But I think that would be amazing. And but for me as well, like, my career so far has been quite So I don't tend to think about the ends that much. Like I'm just like, I'm very happy doing my job, and it's like super. I mean, I get to spend like all day reading and learning and like talking to people like you, and like it's like, I've got to talk to people like, you know, when I first started learning about finance, if someone had told me that Howard Marks would email me, I just, you know, so like it is kind of like there's a kind of joy in that as well, and like getting to pick the brains of like some of the smartest people, I think, in markets at least. So yeah, like I'm just enjoying the job, and hopefully people enjoy reading my articles, and that seems to be the case at the moment. So yeah, long may it continue. Yeah,
I certainly do enjoy reading them. Jamie, if people want to get in contact with you, they've got the hot scoop. Where do they send it?
Or
how do they follow along with what you're doing?
So I don't tweet my articles too much because I have that weird British thing where I don't like boasting, but maybe I should do that more. But no, yeah. So I've got a Twitter account which is at AJB_Powell. So there, I mainly just kind of shit posts. So it's kind of, it's more just like for fun and taking the mickey out of people than like actually like, you know, I don't pin myself too much. And you can message it. My DMs are open. So, I'd say if you've got a story where you're worried about people finding out that you told me, you like DM me and say, hey, I've got a story, and I'll give you my mobile and we can talk on a more secure way of talking. I'm also at jamie.powell@ft.com. So easy to remember, but yeah, that's my email address. So, and I'd love any story which your listeners go, I wish someone was fucking writing about this, or this is really interesting. Why isn't anyone covering this? Like, email me. Like, that is my wheelhouse. So yeah, do email or get in touch. Like, I'm always love to chat. So
well, that sounds good. Jamie Powell, FT Alphaville, thank you very much.
Cheers, Tobias. Thanks for your time. Cheers.